We had a scintillating sort of a first half of the day here, where we heard from people across diverse sectors about how capital flow looks like and is looking like into those sectors. We learned from two stalwarts about the investment cycles over the last 3 decades and some of their vision going forward. The latter half of this day is sort of equally exciting, if not more. We've got some absolutely stunning set of speakers bringing in knowledge from separate sort of perspectives. And I don't know about others, but I'm quite excited to hear many of them. So on this one, on the next session that we've lined up here, we're delving into the world of venture capital. That is something that we all know and we've had at TIE events absolutely regularly. But what we are looking at here is, again, emerging trends, sort of key opportunities that some of these people are seeing from their lenses. So I would like to invite upon stage Anirudh A Damani, Managing Director of Artha India Ventures. Anirudh is known for his sharp acumen in identifying early-stage opportunities and building impactful portfolios. Anirudh, we have with us Mohit Sadaani, who in his new avatar is the Managing Director at DeVC and Z47, has an extensive experience in venture creation himself, and now, of course, is driving innovation at sort of a VC, from a VC lens. We have with us Girish Shivani, Executive Director and Fund Manager at YourNest, a pioneer in fostering deep tech startups and championing futuristic technologies. We have with us Vansh Oberoi. Vansh is the Managing Partner at VC Grid and CIO at Venture Catalyst. He brings in a unique perspective in finding the gaps and nurturing high potential ventures. And of course, moderating this panel is the absolute powerhouse and inspiring Anisha Singh, who is herself sort of a trailblazer in many senses in championing diversity and identifying women-led startups as best as one can. Once again, I would request the TIE team to please invite people from outside in here. We really don't want to leave this opportunity where we have such a phenomenal set of people on the stage. So over to Anisha. Anisha, please take it away.
Thank you so much, and thank you for having us here. Real quick about myself, and then I'm going to hand it to the panel to do a quick intro. I run, actually, can we just shut the door, maybe? It looks like an ice cream cart is pulling away, and it's kind of distracting. I run a venture fund called She Capital. I've been a founder for over 20 years. This is my third venture. She Capital is fairly obvious. We invest in diverse teams. I will let the others, and some of the investments we've done are Baker's Dozen, Elementary, Brainsight, and across the board. I will let Anirudh start, and then if we can just go down and keep it brief intro session so that we make the session more interesting.
Thank you so much, Anisha. Thank you all for being here. So we run a family office called Artha India Ventures, and a part of that, we also are GPs to our own funds under Artha Venture Fund. Been investing for the better part of 1.5 decades, prior to which we were a stockbroking office. We've done about 130 startups, early stage investors in Rapido, Oyo, and Purple, recently Agnicool, and Instastro. And so we invest very early stage into companies through our Artha Venture Fund, and then we do growth capital through Artha Select. So we try to invest at least across 6 rounds into a single company from both of our funds.
Anirudh, the general thing is VCs are very uptight and stiff. So to make this easier, also tell us your favorite book or movie. We'll do it for everyone. Your favorite book or movie. Any favorite book or movie, and you don't have to justify why. It can be anything. We won't judge.
Favorite book, The Four Agreements. It's a book I've gifted more than 1,000 times. And favorite movie would be, there are so many, but Chalte Chalte comes to mind right away.
Mohit.
Okay, so thank you. Relevant to this chat, I started the Moms Company in 2017 with my wife and exited in 2021. So that a good group at the time. Then I was successfully retired for a year, doing nothing and learning golf and learning scuba diving. And I realized through that time that what I really enjoyed was talking to founders Now I run a early stage venture fund called DVC. Our average check size is about 100K. We come in the early stages of a company, help the founders really scale, and then we work with them, and then follow on and so on. We've done about 105 deals so far and 7-8 follow-ons. My favorite book is actually Hard Things About Hard Things, and not because it's a startup favorite, but because it actually supported me as my mentor through many of the ups and downs when I was running the Momsco.
Yeah. Hi, my name is Girish Shivani. I run a early stage deep tech fund called YourNest. We are now deploying, we've been doing it for 13 years now. We're now deploying from the third fund. And we do typically first round of institutional capital, $1 million to $1.5 million as a sweet spot from a ticket size perspective. Some of the notable companies we've invested in include Miko, first check in Miko, first check in Exponent, Dozy, Cron, Viome, etc. Favorite book would be, because I do deep tech investments, there's a book by a gentleman called Alec Ross, Industries of the Future. It talks about path-breaking industries that will change the way we operate. So that I recommend to every founder who comes into the fold and every deep tech VC to go out and read. Favorite movie would be Godfather. And the favorite dialogue in that movie would be to make them an offer no, they cannot refuse.
Hi, good afternoon, everyone. For me, the journey began in 2013 when I was doing a clean tech venture that got the support of an incubator called Indian Angel Network. And I think since then, got completely absorbed into the VC investing space, got the chance to work full-time with Indian Angel Network, then moved on to join Venture Catalyst in 18. Seen the journey of the Venture Catalyst from an angel network platform to today sort of running managed funds with $450 million of committed capital. In the most recent entrepreneurial journey with Venture Catalyst, what I'm building is a platform called VC Grid, where we are only having family offices and ultra HNIs as our LPs, and looking to support companies with $1 to $2 million. It's been 12 months of the journey for VC Grid, and have supported 13 odd companies with close to $22 million already. And yeah, I think just sort of translating the 10, 11 years of early stage experience into now unlocking a lot of domestic capital from family offices. Favorite movie was definitely Three Idiots, which sort of ended up triggering me to drop out of engineering and move into management space, and then the startup and the entire journey happened.
All right, thank you so much, guys. Acha, we'll start with macro, then go to micro. In macro, I just want to understand, and let's take an oath here, jo bhi bolenge, sach bolenge, not sugar-coated types, okay? In general, VC is a fairly new asset class in India compared to the US. What do you think, when are we going to see our homecoming? Matlab, when are we going to move from the ugly sister, stepsister to the belle of the ball? Just in terms of, abhi bhi batana padta hai, lot of LPs, lot of people, you have to make them understand this asset class as opposed to mutual funds or whatever, right? Girish, you want to take it and then everybody can jump in?
So I think we are at the footsteps of that transition.
The first step.
First step of the transition. Okay. The reason I say this is because the slew of IPOs that have happened in the last year, a lot of money has been recycled. People have made money. It has come back into the ecosystem. The attractiveness of the asset class ultimately boils down to whether you can return capital or not. And I think that has solidly been proven in the last 12 months. And I think this next 5 years between 2025 and 30 would be the time when in the Indian early stage VC ecosystem will really bloom to get to a stage where we will be, we are probably the fourth or the fifth largest right now. And I think we should get to the second tier very easily, if things go well.
Anyone else? Anirudh, do you want to lean in on that?
I think, and I concur with Girish, just to build on top of that, I think it's not fair to say that we did not know how to invest in other businesses. We've all, and our families have invested in each other's or some cousin somewhere, and we've been disappointed. It just wasn't formalized until now. I think the formalization has just started. What we're getting comfortable with in India, which we haven't been comfortable with, is failures. See, business tend to fail, will fail, and always will fail, right? So if you go back, the usual thumb rule is 90% of all businesses fail. So if you go with that intent, we just haven't been comfortable with that failure quotient of it. I think we're getting comfortable with that now. Now we're getting comfortable with selling businesses to larger conglomerates. If you look at the pace at which Tatas, Ambanis, even Adani, all of them are acquiring businesses. Maybe when, I remember YourNest and us were in a business together and we should have sold, right? The conversation would have been completely different in the ecosystems we had sold. I won't name the company what was going to happen, but we both know what it was.
That is going to be my next question, by the way.
So
you're not getting off that easy.
Can we go ahead? So it was a company called Book My Cab. It was the first
रुक जा, question आने वाला है इसके बाद.
अच्छा, इसके बाद आने वाला है?
Yeah, you're
Okay,
already
fair enough.
ahead of the curve.
But the point was, it was so difficult at that time for even us as investors and maybe even the founder to consult him to let his business be bought. Now, I think in the last 5 or 6 years, you're hearing M&A activity in India is at all-time high. We're breaking records every year. And which means the founders are comfortable with coming back for a second innings and a third innings and a fourth innings. This was not there earlier. This tells you that we are probably maybe at the footsteps or even have started climbing that mountain already, because founders no longer feel that if I sell this business, to iske aage main kya karunga, right? Today you're now talking about, and where we've just started backing entrepreneurs to buy other companies, which is a search fund, right? This is happening in India, and the first 5 searchers have already got their search funds fully subscribed. So it tells you that that mindset is changing, because you now have businesses where, hey, you've got a great business, there's no second generation to take it over. There are some family offices over here, I'm sure all of them are facing this issue today. So that tells you that this moment of entrepreneurship and entrepreneurial activity in India, the formalization part has just started. Varna to, I mean, in India, we're all entrepreneurs, yeah, at the end of the day. Let's be honest.
Fair point. Vansh, you wanted to say something?
No, I think while Girish and Anirudh covered a lot of it, I think what we have very closely driven and sort of seen since 16, 17, I think the support of capital at early stages and domestic capital is of utmost importance. I think at the time when the journey of venture capital started, the thesis was we'll democratize the asset class, and I think post 2020, I think everyone sort of agreed that that formalization actually happened in the angel ecosystem. Over the last 2-3 years, that formalization and that I think it's relatively now becoming slightly easier to convince family offices to come in very early. They themselves have these thesis. They've also realized that they've missed out on a lot of alphas when the wealth managers have taken them deals at an IPO stages or Series C, D rounds. So I think we've just sort of, almost I would in my lens say, we've sort of completed the first step. Now it's about not repeating the same mistakes that definitely happened in 2020, 21 euphoric times, and building on this consolidation. And I think one very valid point that Anirudh mentioned, I think that acceptance of failure and how the market's corrected in 23, 24 has sort of taught the entire ecosystem some great lessons. It's just very important now to not repeat them and just sort of scaling it up.
The US and media now has moved on to talking constantly about AI. You'll see a lot of coverage on startups, on AI and everything. We still are, a lot of consumer focus is the thing. Zepto ki baat hoti rehti hai. Yesterday, Minimalist happened day before. So I just want to understand from you all, and we'll start with Mohit, what are some of the sectors that you are bullish about and why? And then if all of you can just chat about that.
Yeah. So AI is interesting. We're not investing, of course, at the infrastructure LLM level, but everything about, right? So agentic AI, orchestration layers, and so on. We have about 11 investments already in the AI space. I think it's sort of sucked out venture capital out of everything in the US. So everything is going to AI. That's not the case here. So in addition to AI, we do invest a lot in brands. We do invest in SaaS companies, and SaaS and AI is merging, but typically selling to businesses. Like Girish, we've done a bit of frontier stuff also, right? So space tech, semiconductors, some research-led applications, and fintech. I think these are 4 or 5 primary areas. The macro thesis is as consumption goes up dramatically, and hopefully GDP per capita goes up, people will consume more, therefore brands will come in, businesses will get built, businesses will want to build efficiently to really drive growth at a low price point and so on. So anything that can help support that, including the lending side of fintech, it's all very exciting. The advantage we have is we work very closely with the top 40, 50 angel investors in the ecosystem across India. And so what that means is we don't our bets at our early stage is all founders. And if it looks like an okay idea, fine, because we believe in the next 2-3 years, a lot of opportunities will open up and good founders will anyway evolve their business model. So not that hard and fast on the trend lines.
Vansh, do you want to go? And then Anirudh can go.
For us, given we are sort of unlocking a lot of capital from family offices, so I would say AI or Gen AI is something that still will take some more time for families who have built businesses and wealth from conventional businesses to understand. But there are about still 6 themes that we are definitely very bullish on. I would say first is manufacturing. I think currently the contribution of that sector is still about 14% less than 15%. And government sort of plans it to pushing it towards 25%. I think that's one sector that at least our LPs are definitely pushing us to invest more in. Another great sunrise sector that we see is logistics. While a lot of action and few unicorns have emerged, but still it's a big, big market. Even now, I think the cost of logistics is somewhere around 12 or 15% that India is sort of carrying. And for mature economies or developed economies, it has to be sub 8%. So I think that's a sector that we'll continue to invest in. Clean tech, or nowadays being commonly known as climate change, I think a lot of action is already happening, and I think there's still a lot of scope. I think that's one sector that we'll continue to be very bullish on. Fourth for us is financial inclusion specifically, while I think payments and digitization of payments has still been largely solved for. But I think financial inclusion, and as the rural consumption patterns are rising, I think we want to sort of go after that. So I think these are few themes that we're definitely bullish on, and we're seeing a lot of early stage investors and a lot of VC sort of opening up thesis and backing these sectors.
Cool. Anirudh? And actually a question for you too. In general, are you seeing family offices, because you both come from that perspective too, are you seeing them more attuned, like AI has a longer gestation period? I think not AI is, I think, underlying for everything. Deep tech, certain companies have a longer gestation period. Are you guys seeing like family offices just happier about consumer because of the wins, or there's no?
I think the flavor is changing, and dramatically so. So I'll first talk about thematically. So we're thematic investors, been thematic investors for the entire journey. So first of all, we're moving in D2C from, let's say, mass, where we did a Oyo, we did a Purple, we did a Rapido, we did Everest Fleet, to now saying, you know what, let's look at the top 6-7% of this population, right, which is that 125 million Indians that will be earning about $10,000 to $12,000 a year. By 2030, this represents almost $2 trillion worth of consumption value. What do they want to consume? Because they don't want to, that economy does not want to buy Tide. It does not want to buy Parle G. That wants to buy something that their grandfather did not buy, right? And we believe that that has a lot of value because there's a lot more margins there. Minimalist is a perfect example of a very high-priced brand in a category that was extremely crowded, created a niche for itself, and then got acquired by HUL. Now, HUL by itself could have never built a minimalist because it would alienate itself from its core audience. But easier to buy a minimalist, or buy, like we were in Beardo, got acquired by Marico, that it's easier to buy that brand than to build it now, right? And I think that's where you're going to see that premiumization of India coming through, where different targeting, different messaging is required for the top 6 to 7%. I mean, so 2 very good data points before I move on to the next theme. Air India just reported that their business class segment has seen a 2.5x increase in traffic versus the economy class segment, which is 1.6x. Mercedes just reported that the cars worth more than 1.5 crores have actually grown in volume and value versus entry-level C classes. Tells you that the Indian audience is moving towards premium, right? So you need to target that market with a different messaging. They cannot be sold to, they have to buy, right? Second, we believe deep tech. So we've just going to finish our 5th space tech investment in this quarter. In the last 3.5-4 years, started with Agnikul, and now we're on our 5th one. We believe space tech, India, with this government at the center and what they are doing with ISRO and geopolitically, what's happening, India will have a $50 billion space tech economy by 2030, right? And that's only going to grow from there. It's just, we just have better engineers, and we just are politically or geopolitically very well aligned. We're in that US block, which really puts us in the right place. So we believe space tech is definitely going to do well, and there are many allied industries that go alongside having a launch vehicle like an Agnikul. Third, we believe that fintech infrastructure, we've been fintech investors the entire journey. Lane Club, Karma Life, all this stuff. But I think fintech infrastructure, even today, it is insanely difficult to get a credit card in India, right? There are 100 million credit cards, 1 billion debit cards, and yet the credit cards outspend the debit cards by a factor of 3x. So it tells you the credit in the economy is required. Any major economy that is built on a consumer platform needs credit. But we don't just have the infra, the banks, they are where they
Women
are.
को तो मिलते भी नहीं है by the way.
Women के lawyers को भी नहीं मिलते हैं. So I'm just being honest, it just doesn't happen, right? And then and the fourth thing for us is B2B SaaS. I think build in India, sell to the world. Again, been doing it for 13, 14 years. We still believe that that thesis is very strong in India, and that's going to continue in a globalization world where, obviously getting to the US is going to get even more difficult now. So I think SaaS is just going to do better. So those four themes, very much interested. I think family offices are definitely invested in deep tech these days. Consumers sabne khel liya, they also believe that, ye list bhi ho gayi, some of them have listed and not done well post listing. So now they feel ki, like for Agnikul, we raised a bridge round and almost fully subscribed. Like we had to compete with other family offices to say, mera to pro rata hai, right? Let me be in, right? So, but it just tells you the kind of Anand Mahindra invested, tweeted about it right away. So they actually feel like it's a badge of honor as well to support a space tech company in India, to support a deep tech company in India. I think that family offices are maturing much faster, probably faster than us VCs also, because it's their own money.
Arey, family offices are replacing VCs. That's why I asked, is this asset class going to exist or no? Anyway, Girish, on to you.
Yeah, so we've been firm believers for the last 8 years now that India is transitioning from a services economy to a product economy. The reason I say this is, if you look at the enterprise plays, etc., about $1 trillion of wealth got created by the likes of TCS, Wipro, Infosys, Accenture in the last 25 years, on the back of IT services, which was driven by a demographic called smart English-speaking engineer. The same demographic today is now, not today, but for the last few years now, is stepping out of those services mindset and building products. And they are building products for the world, Agnikul being a case in point. And we think that between the journey between 3 trillion to 10 trillion, 50% of that will be accrued because India will now start to flex its muscle on the global product ecosystem. Whether it is enterprise SaaS, whether it is hardware, whether it is software, but these will be IP-led, innovation-led products. And that is where the opportunity is. And again, all this is again built by the same demographic, smart English-speaking engineer. So there's a commonality of demographic, but this transition, when we started in 2016-17 with the second fund, was just starting to happen with the new government and the kind of incentives there were on the Startup India, Digital India, etc. And now we are seeing the impact of some of those, initiatives, Atal Tinkering Labs, Atal incubation missions, incubation centers. All that is kind of taking this ecosystem towards building a large product economy. No company has gone from being a developing country to a developed country without having a products in play. You look at US, you look at China, you look at Taiwan, you look at Israel, you look at Singapore. These are all because there was core IP being created on the ground. And that is what is happening today. And I think that's where the big bucks lie over the next couple of decades.
Are you all, in terms of AI, where do you guys, and I have to bring this up as, the token question, aajkal sare yahi bolte hain, so we have to talk about this. But where do you all stand in terms of where do you think India is? Forget that, the Indian ecosystem. I'm not asking how bullish you are and everything. Where are we? Because we had a very interesting conversation around this. Unlike other people that have to create synthetic data sets, we don't have to. Hamara itni badi data set hai. For a lot of things, you've got the things that you need to thump out for a lot of the AI to run on. Where are we in terms of this, or where do you think India is? And please, ye thoda candidly answer karo. I don't think there's anyone here on the official side.
So
he's putting you under the firing line first.
So I'm actually reading, I'm reading an amazing book, and I think it's a book everyone should read. It's called Engines That Move Markets It's a book that starts with the invention of the railways, and then talks about how each and every, like, railways disrupted canals, and then automobiles disrupted railways, and radio disrupted telephones disrupted telegrams, etc., etc. And at each point in this inflection in history, there was a belief that this new technology will change the world. But the point was, it did change the world, but nobody made money from it, right? So what happens is that usually when there is an inflection of technology, it's very difficult to pick out the winners, but very easy to pick out the losers, right? And that's what the book is all about. It's a brilliant read. I would encourage everyone to read it, because I believe AI is going to go through a similar moment, and we are going through that. There are just so many AI companies that it's impossible they will all succeed. My belief is 98% will fail. You'll eventually have 5 or 10 of them that are really going to capture the market, similar to what happened with the Facebook. You know, eventually just there was 2 or 3 winners. That was it.
I'm talking about on a country level.
At a country level?
As compared to, we keep talking about the startup ecosystem, and you see the US in general being really excited. China's doing a lot. I'm just talking on a country level. Everybody is very excited in general about AI.
I think, see, that's 10,000 crore that the government has put together, right? I think it's like what UPI did to digital payments in India. But you have to give it time to fructure. I don't think we have the depth of maybe the technology that is required today, or even the infrastructure to go as deep as the US. I don't think it is fair to even compare us to the US, right? There's a lot more money circling that ecosystem today than it is to us. So in the longer run, I believe what Mohit just said, that we're going to eventually end up as where is this AI going to get used versus infra plays. Let's look at use case plays, right? And what I believe, and we've seen a couple of companies do really well, is those agent-led AI companies that they're replacing work and making it more faster. I think those are going to do really well first, and then you'll obviously see that go up the value chain. We've done a couple of those investments. They're growing very fast in terms of revenue, very quick take-up. The good thing about Indian ecosystem, you know, we adapt very quickly to things, and I see that is where this moment is going to be. I don't see India becoming an infra player in the long run.
Sure. Real quick.
So I think we are clearly lagging on the infra side. I think there is clear, the writing is on the wall. The kind of money US, China are putting behind AI at the infrastructure level it's not even comparable with what we are doing. As Anirudh said, we are still scratching the surface on the application layer of it, and it's getting expensive to using AI now, correct? Because people, to go use a large language model to fire a query and get results is no longer cheap, okay? It looks cheap because we get free credits, but if you have to start paying for it, you cannot do this forever. So therefore, there will be requirement to build a complete local AI infrastructure layer. And it will start from the data centers with relevant GPUs, with relevant large language models, which will be adapted for Indian use cases, etc., etc. And the government also realizes that this is a strategic move that they will have to play, because otherwise we will get left behind. And AI potentially will disrupt, or is already disrupting a lot of areas where it is operating in. So clearly on the infrastructure side, we are still taking baby steps. The policy is being formed. The government has said we'll put 10,000 GPUs, etc., etc. God knows where they will come from now, especially that we are on tier 2 with respect to access to GPUs, etc. So it's not such an easy thing to do. So there is clearly a mismatch between where we want to be and where we are today. And this is not going to go away anytime soon. It will only, the gap will only increase. But having said that, people are doing some very interesting stuff on small language models, on very vertical specific applications, etc. But that can only move the needle as much. The bigger play is in the infrastructure, in managing, in building, AI ops, ML ops. That's where a lot of, bucks need to be deployed right now, so that we can stay ahead of the curve over the next couple of years.
In the interest of time, because I do want to get questions from everybody here, we'll start with Mohit. Hits or misses, and we'll get to Anirudh and Girish definitely, but Mohit and Vansh, you either name a hit or a miss that you're like, man, I love this, or shit, ye reh gaya.
So my hit was Momsco, which changed my life. It was a company I founded and then sold.
You know,
Mrs.
you
was
can't do
interesting.
this. Yeah, ये तो cheating
No, no, I'll tell you
है.
the miss. The miss is more
I
interesting.
swear.
No, I'll tell you the miss.
What did I say? Such case,
tell you the
it
miss.
went for also taking the harder path.
The interesting thing that happened after that was I thought I understand how to build a company, and so I'd be a good angel investor. I invested in 30 companies, where I think I've missed on about 25 of them. So my big miss actually was thinking I'd be a big investor, and now hopefully within a VC firm, I'm learning the right way to do it.
All right. Vansh?
Hits have been many, again, as a group, companies like Zip Electric, BharatPay, Blue Smarts, we've been first round check investors in all of these companies.
Achha, let's make it interesting.
But
Misses kar de.
Misses are many. I think Agnikul was one of the miss. Interestingly, with Agnikul, we had a family office for whom we were able to sort of, get the allocation. But as a platform, we had to sort of miss out. And that was one of the core theses why we felt, let's sort of build a separate business unit itself to not have those misses. And I think on a personal front, one of the hits that I'm really proud of is a company called Rare Planet. I'm sure people who've sort of traveled airports.
I love it.
I think ended up investing at about $500,000. Pretty much incubated the company when the company only honestly wasn't ready for any institutional capital, and sort of have seen and unlocked almost 20 times return given back to some of the investors in a sector which is consumer retail offline sector where institutions would definitely stay away. So I think that's one of the companies that have sort of seen the journey very closely. And I think Agnikul was one of the misses that sort of hits hard even today.
All right. You too.
Yeah. So for us, the hit was Exponent Energy. We were the first check there. We'd seen a prototype of a rapid charging battery pack, which could go from 0 to 100 in 15 minutes in a lab setup with breadboard and wires and, literally like that. And we liked the team and we liked what they were doing, and they were able to demonstrate, to us what was the end goal. And that was a hit. It was the fastest, seed 200 million for us in Fund 2. Misses have been many. We have a portfolio of about 50. My anti-portfolio is about 500. The one that comes to mind was LogiNext. Very rarely, and I'll take 30 seconds. Very rarely, all three of us are found in Gurgaon on a Friday evening. And here we were waiting for LogiNext founder to come in from Bangalore and come and see us and we'd done the due diligence, all that stuff had happened. We were ready to give a term sheet. And when he landed, he lost his bags. And he got mind fucked completely, and we didn't land up, and he didn't come to the office. And 5 days later, you realize he's picked up money from IN. Padmaja is sitting somewhere here. Yeah, so that was a funny story.
Too good.
Anirudh, now we'll talk about
that.
Now we'll talk about the one you guys missed together, okay? Because you alluded to it, so you might as well.
We didn't miss it together. We were investors together.
Acha, investors together.
We were investors together in a company called Book My Cab. Actually, should have been the only winner after the unfortunate Uber case that happened, because they actually had a radio taxi license from the RTO for Delhi, for Bombay and Calcutta. So they were legally, and Hyderabad and Pune. So legally allowed to use the Kali Pilis, right? And number one at one point, really, Avinash created some amazing tech, IIT Bombay grad. And then we had an offer from now what went on to become almost a decacorn. Within 18 months, right? At a 10 million valuation, their 10 million valuation, they would acquire us for 2 million. We had 16% of a potential decacorn. And we thought, yaar, रहने दो, हम बना लेंगे, right? हम बन गए, right? ऐसा ही हुआ. But obviously, I think it was too early for us we can go back and laugh about it. But I think at that time, we really thought that we had the goods, so the chops.
You guys stopped the transaction, or?
No, I think
founder. Was it jointly, or was it like the evil investor?
No. We walked away from a transaction that was on the table because we thought that it was an underball transaction, and we thought because we had the licenses, we had the right to win, but we didn't realize that the flood of money that was going to come into this sector would just kill us.
Yeah,
all right.
Said it correctly. In terms of hits and misses, I think obviously hits actually it's a miss that became a hit, which is Agnikul. We actually said no to the first seed round. Was offered to us by Special. And we thought कि India में Diwali rocket भी उड़ाना problem है, तो ये कहाँ पर actual rocket उड़ाने वाला है. But second, when he came back to us, all I told him was, listen, I think it's amazing. The team very excited, that story amazing. We said, can you just come back with somebody that can tell me ki if you build this rocket, they'll put a satellite on it, right? So he took about 9 months, came back with a bunch of MOUs, we invested. And then I think now what we're really proud about that team is that it's probably the only rocket company in the world that has gone from blueprint to an actually tested rocket for under $40 million invested and in under 7 years. It has not happened anywhere in the world at that speed. So I think definitely that's a hit that I think there are some investments that make you, that make you money, but there are only some that make you really proud. And that one really makes us proud. In terms of Miss Bharat Pay, I think Bharat Pay founder must have emailed me at least 10 times. But this is before Ashneer had joined. There was no, it was just a QR code play कि हम payments करेंगे. I'm just convincing myself why I missed it. But it was definitely offered more than 3 or 4 times. They really wanted us on board. I just could not build a thesis around it. I definitely missed that one. But yeah, that's the one that really hurts. The other ones I can still live with.
Sorry, can I just take 30 seconds? There's an interesting story around Agnikul, okay, that I should say. So this was the only company again where all 4 founders, we were 4 founders by that time, we met, okay, and we spent 36 hours in Chennai. I ate 3 meals in IIT Madras canteen, literally, okay, with the founders, and we walked away because at the stage at which we were from the fund that we were deploying, we thought we would not be able to monetize it. So we walked away from it. But I didn't say Agnikul because it had already been mentioned a couple of times. So but I can guarantee. But I can tell you.
अकेले नहीं हो, misery loves company हम भी बैठे हुए हैं
वहाँ. But I can tell you कि IIT Madras का खाना अभी भी उतना ही बुरा है.
But thesis has changed now. We go to the founder. Don't let him come to us.
All right. We're running out of time. We're going to do a quick rapid fire round, which is a bummer because I don't have my glasses. So we'll just do as many as I can remember, and then we'll just go with that. Yeah, Zoom bhi nahi ho raha na. It's on WhatsApp for me. Too many technicalities. Anyway, so it's this or that. You're only allowed to pick one. Please don't start justifying. Nahi, ye wala bhi karenge, ye wala. Hum VCs, we want everything. Nahi ho sakta. Theek hai? Bootstrapped, very profitable founder. Anirudh, we'll start with you. Or a second-time founder, pedigreed founder, like an IIM, IIT founder.
Bootstrap profitable.
Second time.
Bootstrap, profitable or unprofitable?
Second time.
Wow, it's a mixed. Okay, IPO versus strategic acquisition. Mohit, we'll start with you.
Strategic acquisition.
IPO.
Don't care.
Just show me the money, right?
Okay.
No, yeah, definitely IPO.
Okay, startups, and Girish, we're going with you now. Startups that are going deep local or startups that are going global?
Global.
Deep local.
Global.
Deep local.
Okay. Well, I should have gone the other way, but whatever. Raising money from family offices as LPs or institutions as LPs? This is a trick question. I threw it out there. Nobody wants to answer this, but go ahead.
I think both comes with their own pros and
no,
cons.
no.
Of
This
course,
or
family
that
offices,
question
family
hai.
offices for I think other value-added services that you get from them before, apart from money.
You know, Sidby is sitting here, by the way. I'm kidding. I'm kidding.
No, family offices. 80% of our capital comes from family offices. So.
Don't care.
Don't care.
There was a third option.
These two are really, Girish, you can't. It was this or that. Anyway.
You're making money, you're giving me money, why should I care?
Yeah, but that was
Point
not,
out 20%
that
comes from
was not the
Sidby as well, in
option.
case they're in the room.
Again, I told you, VC, you want it all. Nahi ho sakta. Anyway, we're going to open it up to questions. We've got 5 minutes. So if anybody has any questions, otherwise I'll just keep grilling these guys. I see a question back there already.
Hi everybody, my name is Dipali. My question is for Anirudh. Anirudh, I think a year back at an in India Africa entrepreneurship event, and even on your LinkedIn, you went ahead and said that by 2030 you want to invest in 100 companies in Africa. I want to ask, is it for companies in Africa or companies anywhere in the world building for Africa? And I ask this question as an early founder, one of the core team members of a bootstrap, profitable Indian company building for Africa in education for the past 8 years?
Great question. First of all, I said 2033, not 2030.
Sorry,
A bit
my
too
bad.
short. But I do believe, again, my thesis for Africa is very simple. I think it's an ecosystem exactly 15 years behind India. Almost every single element you see in India is just a replay happening over there. But I believe if you're building in, unless you have local presence in Africa, it's like if somebody was sitting, in Silicon Valley saying, I'm building for India. We just don't understand their issues because their issues are very different. I mean, unlike one country, there are almost 37 or 38 proper different regions that we have to look at. So we still believe that you need to have a local presence, but we're happy to invest. Most African companies are domiciled either in France or they're domiciled in the US, right? So we're happy wherever you're domiciled, but you have to have a local presence. But we're happy to invest in anything that looks at Africa.
Any other questions? No? Or I'll ask one. Valuations. How are you guys valuing companies right now with the market the way it is, fluctuating, uncertain? What are you seeing? How are you staying, on your longer term perspective, and how you dealing and tackling with that? Because I've had some friends say, evaluation, and these are dear VC friends who are like trying to figure this out right now as we're with so many moving components. So how are you tackling that?
So let me start and then they can move up from there. So at our very early stage where we have first check into companies, median valuations are anywhere in the range of 5 to 10 sort of million post money. We'll make money over the next 8-10 years, and in the next 8-10 years, it's anywhere an upcycle and impossible to predict valuation. So it just comes down to demand and supply and percentage holding. There's no sharp valuation benchmark. We don't want to go beyond 10 million typically at the early stages, but no other benchmark.
But you've seen entrepreneurs, founders get more realistic about life right now in terms of...
So valuations have corrected, I would say, by about, from the peak of 21, they've probably corrected by 50%. The other thing that's happened, interestingly, is bringing back AI, right? A lot of founders now see the first 500K, 1 million go a lot further because they need to hire lesser teams. AI can accelerate a lot of the iterations. And so hopefully with a similar amount of dilution, lesser valuation, lesser money, they can still do a lot of movement. And that seems to work at our early stages.
Anyone else?
See, with family offices, of course, they want to see a lot of real tangible value. So I would honestly say even family offices and when in transactions that we have led, we of course negotiated hard and ensured that there's value being left on the table for investors coming in at that round and not just at that round. I think even the last wave of IPOs that have actually made money are all corrected listing prices that have sort of led to that money being made, which I would say back in 21-22, those irrational listings also played its own part in leading to the cycle of funding winter that we saw, at least in India. So when we have to sort of, when we are only bringing family offices, I see them coming in with a lot of great value add, but honestly not driving valuations. I think that's better done with VCs. And that's where I think in that earlier question, I would say both have the place to exist. And in practical world, I think VCs have also started appreciating and valuing, having family offices and operator-minded investors backing founders with a lot of patient capital, while VCs will continue to sort of have their cyclical natures and with the sort of close-ended nature of the investments that they do.
Is there a particular IPO that's coming that you guys are excited about in the ecosystem? You're like, wow, this will be the one to watch out for. Anirudh, Girish?
I'm not tracking.
I don't invest in IPOs actually, so...
but basically
no,
born
I
off
think there
the
are some
system.
good companies that are going to come in. So again, let me just maybe circle back to that valuation question. You have to realize now that this public market thing is putting a lot of pressure on early stage in India, because what's happening is you've got companies that you can find immediate listings, and then you can see a pop in the price, and there are funds actually that are in the pre-IPO stage that are generating like 150% IRR annually and liquidity, right? So obviously when you're investing in early stage tech, they have to recalibrate. And like what Mohit said, I think 50%, I've seen even valuation correction up to 70-80% in many ways, right? And because there's no money there, it's all moved to later stage. When I can get liquidity, why should I come here, right? So I'm very much a believer that this is probably one of the better times and better vintages to be investing because the valuations have corrected. Founders have also become more reasonable. You know, earlier I've heard forward cumulative multiples. Like I don't know how that even got calculated, but there was somebody who said forward cumulative
I used
multiple.
to love that. So, come on.
Like you're
That was the most
accumulating
fun.
next 2 years revenue into a multiple like.
I heard growth rate divided by 2 as a multiple. Yeah, I'm not joking. For SaaS companies, it was. I was saying, boss, okay, you're growing by 100%. You want a 50 multiple, okay?
I mean, and look at the realistic, right? Minimalist, the transaction value of 3,000 crores is about 5 times revenue, and that's for somebody at Minimalist's level, which is profitable as a company. Always been profitable, right? And not that much VC funding actually in that company. So I think you have to be realistic. If it's going to get acquired at 5 times revenue, I'm not going to pay it 15 times revenue today and then get diluted into that. So valuations have to correct, and I'm glad this. Every 4 or 5 years, we have this moment that they have to look at the bottom of the barrel. Yeah. Like either get, take a realistic valuation or don't get funded. And thankfully, I think whoever invests in this vintage, quite honestly, I think is going to do very well because the valuations have corrected to a level where it has to bounce back from here.
All right, thank you so much. Our time's up. You have been fabulous as panelists, dealt with the this and that, and except the two of you. But thank you so much. All right, take care.
Thank you very much, Anisha and the panelists. I think that was a wonderfully moderated session where we got some really, really candid responses and some not so candid ones. But I'm surprised none of these 4 people sort of questioned Anisha back on any of those questions. So she actually really got away over here. Some other time for that. Thank you again, Anisha. Wonderful. So thank you very much once again. And that brings us to the next session, which is directly on family offices and HNIs, fueling India's next generation enterprises.